Hi there, welcome to kneppyinvests. Today, or this video, I'm going to look at a company called 8common. And the main reason I'm doing a video on this company, because I'm not that excited with what they do, not excited with what I'm seeing in their financial statements. The main reason I'm doing it is because they're one of the first companies that do release their Appendix 4C. And so for any management teams out there who do have to release Appendix 4Cs, it's probably best to release it as early as possible because that's where you get more eyes looking at those reports. Definitely happens with me. So anyway, this is a company that delivers financial transaction processing for organizations like governments, non-profits, or SMEs, that sort of thing. So let's get stuck into looking at some facts for 8common. So ticker code is 8C0 or O, depending how you say that, and market cap of only 38 million. So not a very highly valued company here. And when you look at the revenue of 3.8 million and operational cash flow, they were positive for the previous financial year of $70,000. You can see this company is not a bad company, but I'll show you in the next few slides why this company is not an exciting company for me and why I'm not all that interested in it. There are some fund managers who are interested in this company, and I'm not sure exactly why. Maybe because it's what they do. So if you want more information on 8common, they released their Appendix 4C on the 12th of April. And why don't we get into looking at their Appendix 4C, particularly the cash flows from operations. The first thing I always look at when I see an Appendix 4C is I go straight to the cash flows from operating activities, which is section 1. So it's easy to find because it's the first thing you see when you see the actual report. And I always hone in on the receipts from customers. I do have a rough idea around my expectations to what receipts should be for every single Appendix 4C I look at for every single company. So when I saw $868,000 in receipts for 8common, that was roughly to my expectations, maybe slightly lower than I was expecting, but it's in the ballpark anyway. But more importantly is whether the company is operational cash flow positive or negative. And in fact, for 8common, we'll call them neutral because they only lost $17,000 in operations for the quarter, which is actually equal to their advertising and marketing. Now, one thing I'm not showing you here is cash flows from financing and investing activities. And if you do look at that, you would have seen they did spend $400,000 on IP or intellectual property. And that's the reason why they actually did lose cash for the quarter. So they began the quarter with $4 million and finished the quarter with $3.6 million. When you look at the receipts history for 8common, this is probably the reason why I'm not that thrilled about this company. I don't really have much expectations moving forward because their receipts history is just a company that is just going sideways. There's no growth at all with their receipts. It's lumpy, up and down, and that's why my expectations around this quarter's receipts were in line with my expectations because I was thinking it was going to be anywhere between about 800,000 and 1.5 million. It finished at the low end of that expectation, but still, that's where we see their receipts history all the way back to January 2018. In fact, if you do calculate the compound quarterly growth rate in receipts from January 2018 to April 2021, it is negative 1.1% per quarter. So the only way I'm going to get interested in 8common is if I start to see case receipts start going up on a consistent basis. And sometimes before that happens, the market does get excited about the potential of that happening and it will re-rate the share price. We saw that with SciDev before their share price went exponential. I think it went 10-bagger in about 7 months. So will we or may we see the same with 8common? So let's have a look at their charts. The first chart I want to show you for 8common is the monthly chart going back to the IPO in 2014. And when they IPO'd, it was around 25 cents, the all-time high share price for 8common. And ever since then, the share price has gone down, particularly through the first 3 or 4 years. It went from 25 cents to a low of about 3 or 4 cents. We have seen a little bit of a rebound in the share price since about March, April of last year, or well, since the COVID-19 financial panic. We've also seen an increase in volume as well. So those are two things going for 8common right now, is the increase in share price, a nice little uptrend developing here, and the increase in volume. So potentially the market is expecting those cash receipts for this company to be increasing, but we haven't seen signs yet in the business. And when we look at the 1-year daily chart for 8common, you can definitely see that uptrend in the share price during the past 8 or 9 months, ever since August 2020. Before that time, the share price was going sideways on very low volume. We did see the volume start to pick up in July, which could have been a bit of a harbinger for the re-rating of the share price after that. But the market got really excited towards the end of August, so maybe the yearly report it got the market excited. I did have a look at that report. It didn't get me excited, but my expectations might be a little bit different than the market. So that's the major, or possibly the major reason why the market decided to re-rate 8common share price, and the share price has continued to re-rate ever since then with a well-defined uptrend. And if the share price falls below that uptrend, that will be the time to sell. But if I was a holder of this company right now, there's no reason to sell because a really nice uptrend developing or has developed, and you just ride that uptrend as far as you can. So that's all I've got on this video of 8common. I'd love to hear from someone who is a shareholder of this company, and maybe you can tell me why you bought into 8common, because otherwise I have no reason to buy into this company unless they show me some good news when it comes to their financials, particularly the cash receipts and potential for those cash receipts to grow for the next few years. Otherwise, I'm not a financial advisor, so if you do need to seek financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.